Good afternoon, ladies and gents. Welcome to another video brought to you by Total Control Traders. My name is Tim. Let's get right into it. We have lots of tickers covered today. It feels like it's been a long time since we did a video, not counting the Sunday video. Anyway, so let's get into it. So first one we're going to talk about, as usual, we're going to talk about SPX. So SPX, we saw some crazy bearish action over the last 2 days, losing that 8-hour 8 and saw a rejection overnight last night from that 8-hour ADMA. And what we're seeing here is this long-term trend line that we were tracking before, multiple bounces, and we saw essentially it was a rejection right from that trend line. New highs, looking for that break overnight, Sunday night, and I can't remember the exact hour that we started seeing rejection. The bears really came in at 7 a.m. Monday. Is that right? Monday? 13th? Yeah, yesterday. Bears really came in yesterday. The bulls had the chance to break this bullish, but they were unable to. So that's a little bit of a red flag for me, and we will do a market deep dive today, as I'm thinking that there are some red flags coming up. But now, right now, there is not so much of a clear picture whether it's bullish or bearish based on a lot of individual tickers out there. Let's do a quick message. So based on a lot of individual tickers out there, this is the spot for majority to bounce from, whether if that is higher low on the tickers or a lower low with bullish divergence. A lot of charts out there need to hold their lows from here. Okay, so with SPX, it did run a lot more than NAS and RUS did. So this pullback makes a little bit of sense. It brings back into perspective lining up with the other two indexes. But we'll discuss what the red flags I'm talking about here going forward. All right, so essentially SPX held that 0.5 today. GP is down here lining up with the previous support rejection, multiple rejections from back here, multiple supports from here. So GP is lining up with that. It could take a little bit more candle. We could drag this out, and then there will be a confluence area, support, resistance, GP plus this trend line. So what we could be seeing here, oh sorry, don't have my drawing tool pulled up yet. Give me 1 sec, guys. So what we could be expecting here potentially is a little bit more leg down, a bounce before coming back down kind of thing. So that could be the case, but keep in mind the red flag brings the potential of that ABC correction that we talked about before, whereas this is the A, B, sorry, this is the A, B, and then C coming back down to the GP. So there is that potential that exists. If you are swinging full-size bull positions, I would recommend doing some hedging. Right now, market not so clear. Let's take a look at NAS. NAS, we did bounce from that 0.786, almost got to that key zone down below where we bounced from last time, the bottom of the key zone. So we saw a bounce essentially from the 0.786 and not a whole lot of bullish action from there. Volume looks okay, but same idea. We lost that 8-hour 8. This was a key to break. Multiple tests of that platinum zone. Multiple tests weakening the zone, but bulls unable to break it. That is red flag. Okay, RUS, a huge red flag on RUS. We did lose that 0.786 coming straight back down to the lows of last time. We need to hold this long-term wedge lower trend line. Upon the loss of the lower trend line, we will be looking down at the first part will be the key zone, right about 21.28, and then following that, the must hold for the bulls is around 21.10. Upon the loss of 21.10, all bulls out the window. We'll be looking down at 2030s, 2033s for that next support. And the problem with that is this is going to be a wedge bear break. Long-term wedge bear break could see lots of downside, but this being the index, I don't imagine it's going to see lots of downside. And then the next is Dow. So Dow, there's a pattern that I was looking at potentially. Okay, we're looking at this dip here being bought from that trend line just under the trend line. And then same with back here, there was a topping out dip just under that white trend line and making new highs. That pattern is starting to negate now upon the loss of 0.382. I would consider this as a pattern that's been lost, but essentially right now we are still looking at a potential of this. The pattern is still there, but we're gonna need to make new all-time high relatively soon on Dow. And tomorrow with FOMC, I would anticipate somewhat of an increased volatility, whether that's gonna be bullish or bearish. We should anticipate some sort of reaction. And into Friday with OPEC's monthly option expiry, again, that's gonna be increased volatility potential. Okay, so that's the market. Now let's talk about the red flags that I was looking at. So this is the message that I shared in our Slack chat group. Hope you guys can see it. Yeah, it looks fine. Where'd it go? Nope, not that one. Bear with me, guys. I know I pinned this message, so it should be easy to find. Anyways, let's try another method. Let's go through here. Potential market red flag. This message was shared yesterday. So there is multiple reasons lining up. Let's see if they are. We'll refer back to the chart as we go through, see if that's still the case. First one, this could be the fully formed daily bear divergence now on SPX. So let's take a look. SPX daily. On the line chart, we did make a new high, and RSI was a lower high. So this is potential that fully formed daily bear divergence. Not that strong, but something to consider. Second, US dollar weekly bull flag. US dollars. Weekly bull flag still there. Potentially confirming this week. That is scary. So the pattern is still there for that second red flag. Third, we're looking at US 10-year head and shoulders formation with back test of rejection. So let's take a look here. Head and shoulder pattern. Depending, you can draw the shoulder over the left shoulder over here as well. I just like that this way a little bit better. So head and shoulder pattern. We saw a bear break, lack of follow through so far, but we are rejecting from that neckline. Upon the loss of this low 1.34, that is gonna be a big concern. And next is VIX. My biggest worry is on VIX. And let's take a look at this pattern. This is very key to note. As some of you already know, last time I called out VIX, called out this pop here. And just to show you guys exactly what I called out here, because we're looking at UVIXC. This on UVIXC particularly, it was a Adam and Eve pattern. We were looking at a forecast of up to about 25, 23, 25-ish. And that's exactly what we got on this UVIXC. So the other reason why I called out the VIXC bullish move is this very rare daily bull divergence on the VIX. And we saw up to that upper trend line, coming back down, making a higher low. Our entry was somewhere around here. I can't remember exactly which day it was. And boom! Now, this pattern is another thing that I'm recognizing here. And for those of you that has watched my video for some time now, you know one of my strengths is to recognize patterns, repeat of patterns. So this is what I'm looking at here. Well, nothing is exact the same, but it's very similar, okay? So this is a bull break, breaking above that previous lower high. This is a bull break, breaking above the previous lower high. And now we're seeing a back test coming back down to that. Let's zoom in here. Easier for you guys to see. You need to get rid of these upper price actions. Okay, so pop up above the previous high and then coming down, back test this upper trend line before an actual pop. So based on this, there is still a little bit more time for bullish action for the market. And because if we're to look at the current pattern, huge pop above that previous high, and now we're coming back down. Haven't touched that upper trend line yet. We are near the apex of wedge, double wedge. We're near the apex of double wedge back here as well. Very similar. This is a long-term wedge, much longer than this wedge. So if we're to pop here, the move could be huge, bigger than last time. Could be, okay? Could be. So we'll be watching for this back test of this upper trend line, that's when I will probably start picking up some hedges, you know, whatever you consider, UVIX, VXX calls, VIX calls, whatever you want. But whatever you're comfortable with. It's just something that, you know, I wanted to get out there. So that is my biggest concern of, what is this, 6 red flags? Yeah. All right, so let's move on to the next one. Next one is XAU gold. Gold, there is, what did I say? Increasing bear volume, unable to push it down. So let's look at this. Where did I see increasing volume? Nope, that's the US 10-year. No, that's right. Was I looking at silver? Did I make a mistake? Gold spot. No, that's right. What am I talking about? All right, so this is a while back. No, weekly. Sorry. There we go. Weekly. All right, so weekly increasing bear. There we go. Weekly increasing bear volume. Unable to push it down so far. And we are still holding that support. So this is somewhat of a concern as well. If we see bullish action start coming in, that is going to be confirmed red flag. Now, red flag number 6, Bitcoin, bear break, and backtest. Bitcoin, let's take a look at the daily here. So we saw a huge bear break bouncing from that key zone. What on spot bounce that is, hey? And then back testing that trend line. Now we're seeing some sideways action. Daily 8 is still the trouble. So that is red flag number 6. Everything is lining up, especially now that US dollar weekly bull flag is potentially confirming. Very, very concerning. On the shorter term, I am still thinking bullish. On the longer term, there is a huge potential for big bearish action coming. So, just wanted to get that message out there. All right, let's get into the tickers. First one is going to be Tesla. As usual, Tesla, huge, nice play today. And there should be, based on the chart, there should be follow through going into tomorrow. If not, that's going to be a big red flag for the bulls to GTFO, get the F out. And from what we're looking at here is descending wedge that we talked about in our previous videos. Lower trend line, we gapped down. We were in the pre-market. I was looking at this. We were in the pre-market opening right at that lower trend line. Ultimately, the pre-market bought it up a little bit, and we saw a wick under in the early market action. Now, a good thing that I liked about this is, look at this, 15 minutes, big 15-minute bullish divergence. Let me draw it out here. So from here to here, from here to here, bullish divergence, and we saw follow through into the end of day bullish action. Bullish price volume came in, and still holding above that 15.8 in the after hours. Bulls gonna want to see continuation tomorrow. We are a little bit, very slightly extended from that 88. Watch for the reaction at the daily 8 tomorrow. I'll be watching for a reaction around 1,000 if anything. So that's Tesla. Next one is Apple. Apple remaining to be one of the strongest names out there. However, there is big pullback yesterday, and with that candle, this is exactly what you would expect. Further follow through on bearish price action. Today we did play this bounce from that daily 8 with options. It ended up being not too profitable. It was only a 1.23% move on the commons, but decreasing bear volume, holding that daily 8 so far. Liking what I'm seeing. This is already gone its immediate back test. Let's see if it can get a little bit more follow through before coming back down. I can see this making a higher low, back testing this previous resistance at about 170 before a next leg move up. So what I'll be looking for potentially on Apple would be something like this, back test wick 0.382 lining up before next leg move up. So that's Apple. Next one is, why is there 2 apples on there? Lucid. How can we forget about Lucid? Whew. Look at this. Okay, so Lucid, the whole time, the alert I had set was at about 35.63, right around this resistance, support, rejection again. Not exactly rejection, but a little bit of a stall. And then a support again on Friday. Today, yesterday was the uplisting to NAS, I believe it was. Are we trading on NAS already? Yeah. So yesterday was the uplisting to NAS, and we saw relative strength already yesterday versus the market. Look at that huge lower wick. What is this telling you? Double lower wicks, decreasing bear volume. We're gonna see higher prices. I love it. This is gonna be most likely gonna be the higher low. GP, did we touch the GP? Oh, so close. Oh, 8 cents off. 8 cents off the GP. Wow. This is the must hold for the bulls. Now, we're going to need to see that continuation tomorrow, breaking above and closing above the daily 8 for confirmation. And then we'll be looking for continuation through that. Relative strength, amazing chart. Top watch. Next is JNJ, Johnson & Johnson, one of the tickers we've never covered before. I just happened to come across this today. Very nice relative strength, breaking above support resistance at 167. And now we're in the key zone. There is no sign of slowing down. Look at this bull volume versus the bear volume. Amazing. So with this, what I would be expecting is eventually we're going to probably another day or two of running before coming back to back test this previous resistance 167. That would be amazing. And let's see if it lines up with anything. So if we pull back here, doesn't really make sense. Maybe make a little bit more sense running up to, wow, look at that. So 174.56, 175-ish. Previous resistance here as well. So that would make sense. You know, a little bit more follow through, extend it on the daily before coming back down to make a higher low. Johnson & Johnson, very strong relative strength to the market. Next one is PG, Procter & Gamble. Something we haven't looked at before either, but it's very interesting that we are seeing nice bullish action, relative strength to the market as well. Look how strong this has been over the last few days. The last what is this? 10 trading sessions. The last 10 trading sessions, we've seen a 10% move straight from that lower trend line of the channel to the upper trend line of the channel now. So that's a little bit of a concern. You know, probably sometime the time to take a little bit of profit if you are in this trade. This upper trend line, we see previous supports along this side and then became resistance, and now we're right there again. Lower trend line not as accurate because we saw 2 breaks down below, but ultimately immediately bought up, so we will keep it there. But this is something I'm looking at. Procter & Gamble, not something I'm used to trading, but maybe time to get familiar with it. All right, next one, we're going to be looking at the requested tickers. First one is going to be NVDA. Hey, lots of questions asking what if the NVIDIA is going to be bouncing, what's the direction looking like. Hey, today is actually a very nice entry area. For those of you that are in our Slack chat group, you would have been notified about this. I do believe I sent out a message on this. This is a short-term trend line that we're looking at, multiple resistances, 1, 2, 3 rejections. And then now we're at that trend line again, lining up confluence area with the 0.5. And we're a little bit extended from that daily, gap down open, a little bit of selling into that area, and then immediate buy up. What an amazing, look at the bull volume coming in too. Daily chart is cooled off. This thing, if we're to buy up from here, daily bear divergence that we talked about for a long time, this took a while for this to play out because the bulls were strong. Because if we're looking at this, okay, it actually ended up being, you know, it took a while for this to play out. Ended up being like this, whereas you would normally expect the daily bear divergence to immediately play out. But whew, strong chart. If we do bounce from here right now, this trend line along that 0.5, I would anticipate new all-time high to come shortly. By shortly, I mean maybe 1 month, 2 months kind of thing. But ultimately, we'll be looking at the within half a year, we'll be looking at new all-time high easy. Okay, there's gonna be a daily bear divergence, no follow through. If we see follow through on the bounce tomorrow, gonna need that trading over that daily 8, of course. Next one is RBLX. RBLX, the alert I have set is right here about 104, 103. The must hold. So essentially, it is still in a daily wedge. We're gonna need to see that reversal confirmation. So today could be a bottom reversal candle where it's like a, what is it, spinning bottom kind of a thing. And from here, we're gonna need to see that reversal tomorrow, ideally getting over that daily 8. The key to break remains this upper trend line. Once this key trend line is broken, we can be expecting new all-time highs. Chart is cooled off, ready to move. RBLX remains on top watch. Next one is Microsoft. But man, what the hell happened to Microsoft? Hey, this was my call out on our weekend video. And what the hell? Come on, man. So we're looking at this extra strong volume coming in after decreasing bear volume, and then something happened today. I didn't read into it, but this looks like news to me. Strong, we're seeing a little bit of an upper wick, which is completely fine. We're still above the 88, and it just gaps down straight down under that 88 with bearish volume coming in. So this is going to be a little bit harder of a trade than anticipated. We were in the greens, now we're in the red. But let's see what goes on from here. Let's see if we were to make a new low. No, that's potential red flag. Yeah, that's a potential red flag. I'm gonna want to see a hold of 323. 1-to-1 extension target. There is no bearish divergence already been negated. Oh, this chart's gonna take a little bit longer to play out. Ultimately still looking bullish on this, but now it might not be this week. Might take a little bit more time. There is a gap to fill. If we're to see that reversal tomorrow, we'll be looking at a gap to filling the gap over the next few days into the end of the week. Microsoft, red flag. Don't really like it, but we held through it because we needed to see that bounce. Now we're going to need to see what tomorrow looks like to make a decision on that trade. Next one is Netflix. Hey, I'm never going to lie to you guys about, we're always 100% right. One thing to make sure to do in order to improve as a trader, improve yourself is, sorry, I just realized the heater is on, so there's background noise for you guys, is to admit the mistakes, recognize and admit the mistakes that you have made, and then learn from them. So that's potentially going to be one of them for Microsoft. Good thing we weren't doing too big of a sizing. Next one is, what do we have? Netflix here. Short-term trend line. This must be broken. There is now a daily bear divergence. Why is this chart so messy? Give me one sec. What's this blue line? Oh, post market. Okay. 0.5. We just lost a 0.5. GP is still down under. We now officially backtested this previous high, 593. Daily bull divergence. We're gonna need to see that follow through tomorrow. Potential reversal candlestick today, but need that follow through tomorrow. This is one of the tickers that's gonna be, to me, is gonna be remaining as a no trade, because if you look at this kind of potential daily bull divergence, we need that next day to go up to confirm, or else no trade until this upper trend line is broken. Very similar to RBLX, except the wedge is already broken, so a little bit weaker. And next one is FedEx. We have not looked at this for a long time. Hey, FedEx, easy chart to trade. Exactly like Netflix. Upon a break of this upper trend line here, until then there's no trade. But upon an actual break above it, if we're to zoom in, this could have been a very slight close over. Let's see, 4 hours. Right on it. Yeah, so this is definitely the key trend line to watch for Netflix. Multiple rejections from it, 4 areas of rejection from it already. There is no daily bull divergence on this, so that this could continue to bleed. No trade until this upper trend line is broken. Alerts already set over here, and that's it for oh wait, no, there's one more. PLTR. I'm actually starting to like PLTR chart a little bit now for the reversal, because if we're looking at this, there is now a daily bull divergence, relatively strong daily bull divergence, and we're seeing a early sign today throughout the day, because it is on my shorter time frame watches. Throughout the day, I did notice relative strength versus the market as the market was pulling back today. So there is now in case you're wondering why I'm drawing this like this, the bull divergence, I've changed now to using the closing price, as you can see here. So this is a daily bull divergence, relative strength to the market today. We're gonna need to see that follow through tomorrow, but this is a good spot to bounce from. Ultimately, we did bounce. We are coming back down to this previous resistance and support area. Let's see if any fibs lining up with this. So for those of you that are still practicing or getting used to how to draw fibs and fib extensions, I would recommend using, to help you along, using this pivot high-low indicator. This helps you indicate where is the high And I think I did customize this one to 1010. So it's very easy, very easy number to remember. 1010 on pivot high low. What it does is it shows you that previous higher low, lower highs kind of a thing. So it makes it a lot easier for you to recognize if you are still practicing how to draw fibs. So the fib extension over here, what you would, because it's an extension, you're going to be wanting to draw from the high to the higher low to the lower high to see where that extension downward is. If it's the other way, then you draw, first move up and then higher low, and then to see what the extension looks like. So with that, let's see, nope. Not there yet. Ooh, so there is a chance that we could get down here to that $17, just under the $17, lining up with that previous support resistance. So there is a chance for that. It doesn't line up with any fibs. So there is still a chance. No, I'm going to leave it over here as a reminder that there's a chance for this to continue to bleed down to that just under 17. Head and shoulders, neckline break. It was a gap down break. Oh, that sucks. Okay, gap down break, huge follow through. Now, bulls need to prove themselves. If not, we'll be looking at $16.97, right around there, $17. All right, so that's it for the requested tickers. Next one we're going to be looking at is Facebook. Hey, one of the hottest tickers everyone's talking about. I don't really understand why. Is it because of the bull divergence, double bull divergence? We're seeing some decent moves here. We are seeing some relative strength over the last few days versus the market consolidation on the last few days. We are seeing having trouble with this GP now, which lines up with the bottom of the key zone. Multiple rejections so far, but the chart looks strong. We are both lagging on the daily. With today, nice bullish action. Very minimal sellers coming in. This chart didn't move too much from the top, eh? So it is still a relative strong chart, I would say. Long-term channel bear break coming back down. Double daily bull divergence. I like it. But the only problem with this chart is until this 353 is broken, this very key support resistance right over here, 347, I would say, close above the 347.70. Until that happens, there is no daily trend reversal. So this could just be a daily lower high. Lower high. Whew. Lower high before coming back down to that GP. We never touched the GP. This is ultimately what I was looking at before. This from all the way from low here and to the high here. And this GP lines up with the bottom of the key zone. So there is still a potential for this coming back down here. Is there a trend line? That looks like there might be a trend line here. We'll call that the trend line. Very, very notable rejection over here. So the top, nothing closing above, multiple rejections. Multiple rejections again, nothing closing above, and then another rejection. So until this trend line is broken, that's the easier sign to play maybe. But if you don't want to wait for the break of 347 closing above, you could attempt to front run this based on this trend line. So that's Facebook. Next one is DOCU. DocuSign. Did we see strength on it today? Oh. I don't really like the chart. So I'll tell you why I don't like the chart. There is no bull divergence. Is there a 4-hour bull divergence? No, there isn't. So there's no bull divergence on this. This could be simply a trend reversal, but you're gonna need over that 4-hour 8 first. On this chart, when I would consider playing it, it would be more so a break and close above 155, or a break above 163.77 for that trend reversal. Until then, yeah, not really seeing a play here. Even if you were to wait till the break of 163.77, okay, so say a worst case scenario for your bull play, you're waiting for the break of this, you're still looking at a 39% just for that gap fill play. No rush on this. So that's DOCU. Next one is the ROKU. Very similar chart. ROKU is a little bit more strong because we did bounce from that bottom here, and that was a 35% bounce. Hope someone caught it. Now, the big worry I have about ROKU is we did fill this huge gap here, but there is still a gap left behind here. And that's where the GP is at roughly as well. Ideally, what I want to see is a new low making that strong daily bull divergence, that would be the most ideal play. If not, you know, if you're playing bull, ideally you're going to want to see at least a gap fill here. We're off by a little bit, 210.33, 211.20. So it's about 87 cents off from the gap fill. That's big enough for me to be a little bit concerned. If it's like, you know, 10 cents, 5 cents off, that's fine. But this is a 0.5% off. So that is a little bit of a concern until this I don't want to give it too much room here. How much room to upside? Okay, so there is a lot of room to the upside. There is a trend line as well, looking like. So if we draw a trend line, okay, we'll see there. Let's remove this alert. We will change the alert to this upper trend line. Upon the break of this upper trend line, then maybe there's a play for this. Ideally, on this kind of chart, because of the gap left behind, I would rather see a break above 261, 266 kind of a thing. Problem with that is it doesn't leave you too much room to that key zone above. Anyways, ROKU, you know, personally, I probably use this trend line as an alert instead. And next one is Amazon. Amazon's gonna need to bounce from here. Okay, need to bounce from here. And this is what I meant by a message to our trading group today, that, you know, we'll be looking at a lot of tickers are at the areas of needing to bounce from that, wherever they are at, whether it's going to be lower low with bull divergence or higher low. A lot of these are going to need to bounce now. So we're going to need to see the market cooperation. As of right now, after hours, market is very, very slightly bullish. If we're looking at this, you know, double fake out pattern, it would still be valid even if we were to come back down to the GP again for that third touch. But I don't like that. That would make the play a lot less intriguing. It's still there, because once the bull breaks, it's gonna be a big move. We're looking at this double trend line here, and this double trend line, we are right down under it, opening down, slight gap down below. Now ultimately is, oh, it could have been a triple bottom, but we lost it slightly. Extend it on the daily. Gonna need to see that follow through tomorrow. After hours is up very, very slightly. Amazon's gonna be on top watch tomorrow, making a decision. I'll make comments. Next one is BYND. So a couple of tickers. These next two tickers I wanted to bring up. It's very similar, somewhat similar to DOCU and ROKU, but potentially better play than them. Look at how strong this daily bull divergence is. So price is lower. Huge move on that RSI. BYND, BYND. Big potential to the upside. Does Fibs line up with anything? I don't think it'll line up if we were to draw it from here. But let's take a look regardless. Maybe it's a GP. Nope, below the GP. 1-to-1. Nope, above that. Huh. Alright, so we will use this one instead then. Oh, still doesn't work. Yeah, so fib extension is not working on this. Support resistance not working on this. So that part of the chart I don't really like, but strong daily bull divergence. I can see this, and we did close over the daily 8 as well. I can see this having a very nice bull move before potentially coming back down. So you know, gap from back here. What we could expect is something like this, daily trend reversal, coming back and gap fill before coming back down to make a low. So that is a potential on BYND. Beyond the next one is Uber. Very similar, strong daily bull divergence. Okay, that still works. Strong daily bull divergence, and not as strong as BYND on Uber, but we did see bullish action today. We are still closing under that 88. So between the two, if you were to choose one, I would probably say BYND is looking a little bit better than Uber. All right, and the next one is, since we talked about NVDA, we're going to quickly cover that semi sector, which is hot. Okay, AMD, we're bouncing from 0.5. We did gap down and immediate, was it immediate buy up? Wasn't really paying attention to the other day. Let's see, yeah, immediate, so gap down, immediate buy up, forming at lower, higher low, and big bearish volume at the end of the day, unable to push it down though. So we're going to need to see a break over 137.20 for that 30-minute trend reversal. But I like the chart. 0.5. If this 0.5 holds and we see follow through tomorrow, I would anticipate that would make it a lack of follow through on this bearish divergence from back here. That's I'm not sure why I deleted that, but that is very key to have. You know, daily bearish divergence, we're going to see a lack of follow through if we're bouncing from this 0.5. That is going to be one strong chart. Let's move this alert a little bit further down. Okay, I like this area. On the break of 141.19, which would also be above the 88, would consider an entry on AMD. Next one is QCOM. QCOM between the semis. You know, this one is one of the strongest. Look at this. Bull flag. Is it a weekly bull flag? Weekly bull flag. Tried to confirm on yesterday, but it got shut down. Yesterday made new all-time high, immediately shut down. That's a little bit of a red flag, but from here, let's see what happens. We're gonna need to see a little bit more, maybe a couple, 2 to 3 more weeks. Weekly 8 is still catching up. No rush on this. Strong chart. Whew. Bouncing. Look at this. It's holding that 0.236. Not often do you see that. It's holding the 0.236 on this weekly chart. Amazing. All right, so that's it for today's video. Hope you guys enjoyed. You know, there's not gonna do a recap today. Just make sure you enjoy the content. If you know anyone who might benefit from the content we share, please do consider sharing our channel with them. And hey, we're seeing a pickup on subscribers, our views, as well as members joining our team. And just a quick reminder, there is now only, I can't remember if it's 13 or 14 spots left on that first enrollment of free membership to our trading chat group. And as of right now, there is no current plans for a second phase of enrollment yet. So make sure to check it out if that's something that interests you. Thank you for watching. I will see you guys in the next video.